1, 2, 3. Yes. Okay. So, right now, we are going to slightly change the concept. I usually run the Great Pitch Contest, which is for startups pitching in front of investors, but right now the focus will be slightly different, and I'd like to invite our LPs to join us here on stage with us while I introduce you. We've got here Sergey Yakovlevs from EIF. Round of applause, everyone, while we get ready. Nick Fiersley from World Pensions Council, and last but not least, Shani Zanescu, yes, from Consensus Business Group. Yes, thank you. Okay. If you're comfortable, you have also things for your notes. The format here will be that the pitch will last 7 minutes, and then we'll have 3 minutes for the Q&A where you can get active and ask questions. So feel free to raise a hand when you'd like to speak up, and we'll see how this goes. This is our first time at Alpha Wolves doing this format, so I'm very excited about that. And without further ado, I'd like to introduce the first GP who'll join us here today, and it's Matti Kaninen from Butterfly Ventures. Big round of applause.
Okay. Hi, everyone. Great to be here in front of you today. Hello, jury. Okay, my name is Matti Kaninen. I'm one of the partners at Butterfly Ventures. We invest in deep tech companies that solve world-defining problems. We're based in the Nordic and the Baltic countries. We invest from seed to Series A, and we have just made the first investments of our fund number 4, which had its first closing 47 million last year and going for the final closing this year. We have proven track record in the team. We have invested in 84 companies so far during the years. Very strong deal flow in the region, supported by our Butterfly Science Venture program, which we run in the top 14 tech universities in the region. Good financial metrics, portfolios up to 58% IRR, a great number of good exits, average their IRR 50. So this is the 10-year track record. And the team, here are the 4 partners, a diverse team. I would call a corporate guy with engineering background, used to work in industrial companies. Juho, the second from the left, serial entrepreneur, did raise VC funding for his own companies. Tanya is investment banker from New York, have lived in Stockholm for 10 years. And then Ville, as a background, is a lawyer, a tech lawyer, and a lawyer for private equity. And then the rest of the team, we are 9 in total. We have a diverse investment team with backgrounds in as an entrepreneur, marketing, and lawyer. We cover our region very well. We are actually operating from 5 offices. So Oulu, Helsinki, Tallinn, Stockholm, and Copenhagen at the moment. So covering the deal flow, we believe that investing in early stage is a contact sport, so you need to be close to your founders. But hey, enough about ourselves, but let's go to the thesis. I'll talk about the sort of technology side, the market view, and then we take it from there. We all know that it has been said, and it's true, software rules the world. But the question is, how do you put the software where it already isn't? So it's all about the digital and the physical world overlapping. It's all about software and hardware getting together. But I'll let someone else to in nice words. Sundar Pichai, the CEO of Google, said that the biggest breakthroughs happen at the intersection of the AI software and hardware. And this has been our technology thesis for the past 6 years. But then if we look at the market view, and the source here is actually BlackRock, the global mega trends, they are driving the change. So if we look at the climate crisis, the change in demographics, the aging of people, and the rapid urbanization and all the challenges we have in big cities. These are creating tremendous demand. If you think of the climate crisis itself, some years back they said that it's like we're going to invest 2.5 trillion. By the Glasgow COP meeting, it was like 25 trillion we're going to invest to mitigate the climate crisis. So it's a huge market, so great demand for these companies we invest in. But then we talk about deep tech. When we talk about deep tech, it's much, much more than just software. So the picture there, you can imagine, how do you do the electrification with software only? Doesn't work. You need software, you need actually something intelligent science, and you need hardware. And you need to put these together. And that's where our thesis is built on. So we invest in where the biggest breakthroughs happen, in these intersections of software, hardware, and science, and that's where actually the world-defining problems are being solved. The solutions to those challenges are created. So software-driven hardware, hardware deep tech, software deep tech. I come from the Nordics, so we are Nordics and the Baltic countries. Baltic countries, very important part of the region. There's a lot of track record and heritage in great companies in the region. So we know how to do it. Actually, did you know that that in Europe, the per capita livelihood of finding a unicorn is 7 times higher in our region? And then, of course, we are a little bit different as a GP from the average. And the advantage there is that compared to pure software-focused GPs, there's a 2 to 3 times less competition in our region. The graph is all the active players in the region and where do they invest in and at which stages. So less competition, better investments. So we are now raising our fund number 4. We've done now 5 investments after the first closing out of the fund and going for the final closing. So that's Butterfly Ventures and our diverse team of 9 people, 4 partners there. Proven track record investing in deep tech companies solving world-defining problems. Thank you.
Thank you.
All right, so we can move swiftly to the Q&A here. Do you have any questions? You have your microphones here. Just make sure that they are on. And feel free to kick off the Q&A session.
Thank you. I can see an established, experienced team raising their 4th fund, operating in an interesting sector of the market. You're covering deep tech. I can see a good mix of software, hardware, science. What about your deal flow? How are you managing the pipeline? Where do you see the deal flow basically coming from?
The good thing with our cooperation with the local top tech universities, so we have 14 universities that we cooperate with our Butterfly's Science Venture program. So we basically know what's cooking, bubbling under, and coming up during the next 2 to 3 years. So actually the companies we are investing today, we kind of knew they are coming, many of them, not all of them, but many of them we knew they are coming, and these technologies are coming within 2 to 3 years. They will be ready for the investment. Of course, they were developed perhaps within those universities or research institutes already at that time, but we knew that they are coming, and we have cases where we have shaken hands with the to-be founders that, when you have your company and when you're at this stage, we will be your first professional investor. And we just actually exited one of those companies to Telenor Group in Norway.
Maybe just to follow up on that, a couple of questions for me. How do you add value to those, to the founders, to those companies? And is there anything, because you're raising your 4th fund, is there anything different in your 4th fund from the previous, in terms of strategy, from the previous 3 funds that you manage?
Yeah, certainly adding value, and especially with the founder teams that have a sort of research background, there are some clear pitfalls that we can help them to avoid. So we know the path that they have ahead. They don't usually know it because they are first-time founders, many of them. So we can clearly help them because we know those pitfalls, and we've been there, we've done that. So we can really help that. And the second part of the question was about?
So anything different from in terms of strategy from the previous fund?
Yeah, actually the only real difference is that this is a bigger fund than the previous one. So when going for the A rounds, sorry to say for the previous funds, but we kind of left money on the table. Now we don't.
Thanks. Yeah.
Turned it on. Great. Thank you so much. I gotta say that I really liked your presentation in the sense of demonstrating the combination between hardware, software, and science. Also a true believer, and I think it's really important to stress that. And I have a question regarding the geography. So you've mentioned you're operating in the Nordics. Do you also invest in companies outside of your local operation, or?
Yeah, and depending on the definition, I mean, we are very active in the Baltic countries, so Estonia, Latvia, Lithuania, and there is this term New Nordics, which actually includes the Nordics and the Baltics. But this is our region, and as said, we believe that the early stage investment is a contact sport, so we want to make sure that we are very close to our founders to be able to support them fully.
Okay, and just another maybe note or a thought is that when you demonstrated also the competition, and I mean, I believe that also there are global VCs in the space that want to invest in the same companies. So maybe what is your differentiation in other than being close to the market or to the founders, which is obviously key?
Yeah, and about the competition, it is actually the A rounds that are very competitive these days. I mean, it kind of used to be that like from the US they came to the B rounds, then to the A rounds. Yes, we have seen coming to the C rounds as well, but still, you know, when you are in the sort of pre-seed seed, not the late seed, it's not that public, so to say. So you can't really find many of the companies when we place our first ticket. You cannot find those companies in the public databases to start with. So it's a different game, and that's actually part of our strategy, that we want to be seed entry for the reason that we are actually on the driver's seat when we lead those 8 rounds.
Okay, thank you so much.
Thank you. We ran out of time, but big round of applause for Matti.
Thank you.
Thank you so much. And now let's welcome on our stage the next GP of today. Yes, this is yours. And it's Eszter Elemer from Impact Ventures. Okay, right there. Big round of applause.
Thank you.
Okay, I'm starting the clock. You've got 7 minutes for your presentation. Good luck.
So, good morning, everyone, and a special thanks for the Wolf Summit team to set up this meeting. It's always a funny thing to sit on the other side of the table. However, I'm continuously in the fundraising since 10 years or something like this, but it's always a bit funny to be a pitcher and not to hear other preach. So, Impact Ventures, a Central European, Budapest-based social impact and environmental impact venture capital fund. We are leading impact investing in the C region. We are So we are a strong team with 4 partners. We are friends since decades. We are really a Central European team focusing on our neighboring countries, and we have this social and environmental impact focus, which is a bit more than the VC methodology. We are adding the impact element, and we are measuring impact. So what differentiates us? We are really unique. We have a really unique deal flow access in the region. We are giving non-profit, non-financial support for our portfolio members, and this we can divide it for 2 chunks. First of all, we are going really close to our portfolio members. We are supporting them with business development knowledge, with a unique network what we have. We try really help them. But from the other hand, and this is probably now this is an impact from our side, that we are really support the mental health and the well-being of our portfolio members, which is unique. And I'm as the chairman of the Hungarian Venture Capital Association. We had an initiative for all VCs to focus on this issue and as well. Last but not least, we have a strong strategy. We are launching our third fund, Impact Ventures 3, and we will really support the impact unicorns from the region. So let's sum up in numbers what we have done so far. We are a boutique venture capital firm backed by EIFs, and always thanks for them for the great support, for Silje Guffes and the team. We are managing 21 million euro, and we invested in 15 companies. We are at the end of our investment period, and so therefore we started the follow-on investment. We raised almost the half of the whole fund for follow-on investments, and we facilitated more than 5 million euro from other well-known reputable European VCs to follow on invest in our portfolio companies. So we are over our first exit from this fund, and we are extremely proud on that. If I want to summarize, what does it mean for us, the impact in numbers? And let me stay for a second at this point. So if I say impact investing, it sounds really exotic, but I think it's really exact. And I tell you why. We are measuring impact. It means that we try to put together with the portfolio companies an impact thesis for every different company. And in the impact thesis, we define 2 or 3 impact KPIs, and we measure the impact, what was done by the portfolio company. Furthermore, our carry participation is linked to the impact performance of the portfolio. So don't think that it's only a marketing tool, and I'm really fighting in the Impact Investors Association as a chairman as well to save the impact investing, to downgrade to a single marketing tool, and we are really doing everything to measure impact and to use impact as another channel of the surplus. So if I want to sum up in numbers what impact we generated, the portfolio companies which we invest in treated more than 12 million people's life with a positive outcome or a positive impact. And certainly we saved the world more than 265 tons CO2 avoidment. One more important issue which I have to tackle. You have to keep in mind that impact investing is not a charity, it's not a corporate social responsibility. We do not have any compromise on the financial return. So we are adding the impact element actually to the classical normal VC process. So we are looking for financially massive and performing and scalable companies, as every VC is done in the world. Just we have a unique focus, which is the impact focus as well. So in the region, in the Central and Eastern European region, where we are active, really active, we have a special and unique deal flow, but we are investing in Europe as well. Thanks to our investors, we have a European mandate, so it means that we have a Spanish company, we have an Italian company, and this keeps a real good balance. But still, we see that in the Central and Eastern European region, there is a lack. The impact enterprises are underserved with the financial vehicles, so there is a chance for a window of an opportunity to invest in really scalable impact startups and scale-ups. That's what we want to do. We are launching our third fund. We are in the fundraising for that, and we already raised more than 60% of the whole fund size. We want to have a 50 million euro fund, and we will split the whole fund size. One half of them will be environmental impact investing, and the other half will be social impact investment. So the ticket sizes are starting with 350K to 5 million euro. We realized that it is an opportunity to raise up our ticket sizes, and we will be active in the Central and Eastern European region, but with the mandate for the whole Europe. So I think that's all. My colleague, one of my partners, is sitting here, Camilla, and as I mentioned yesterday during the gender diversity panel, that we are not intentionally but organically we became a really diverse team. So I think this diverse team will be the leading impact investor in Central and Eastern European region in the next future.
Thank you. Let's hear a round of applause. Thank you so much, Eszter. And now let's move on to the Q&A. Are there any questions? Go ahead.
Yeah, I have a question for you. I have a question for you regarding the SDGs. You said that you were actively addressing 14 of the SDGs, and so first question is, which are the 3 which you are deliberately ignoring?
We are not ignoring any
or-
any kind of SDGs. We are sector agnostic.
Okay.
But we have some sweet spots where I think we are quite active. Plus, we are a bit more experienced. This is healthcare and well-being,
Okay.
education and HR, so employment. And last but not least, sustainability, which is a huge gap because we invested, for example, in a protein producer company who is converting food waste for animal feeding protein, which is
Right.
actually it's a hardware project.
But like, for example, in the SDGs, there's one specifically about, life on land or earth, the other one on life below water, or, the blue economy. Do you treat them separately or do you combine them? And how do you measure the advancement of your portfolio vis-a-vis these metrics, or do you use any metrics?
So, okay, as I mentioned, we are creating together with the portfolio company an impact thesis. In this impact thesis, we define 2 or 3 impact KPIs, and with these KPIs, we are measuring the produced impact really specifically and really by numbers. And actually, from these numbers, we're generating a portfolio level impact performance, which we have to communicate with EIF. We have an advisory board, and the advisory board every quarter reviewed the impact performance of the whole portfolio, and especially looking for the potential mission drift, because it's impossible to have a mission drift at the company level. So that's how we are measuring impact.
Thank you.
Thank you. You mentioned beside being an impact investor, obviously, you are also focusing on the commercial sort of side of your investments. I understand you have 1 exit so far at 1.3 money multiple. Can you elaborate a little bit on the current state of the rest of the portfolio, and if there are any value drivers, and if there are any exits foreseen in the near future?
So yes, yes, as you really understand correctly or feel correctly, philosophically, we believe that impact can be sustainable only if there's a massive and measurable and reasonable financial performance of the company. So for us, impact and finance must be inherent, in-baked part of each other. So that's really the fundament of our thinking. The business performance of other portfolio companies is quite good. Certainly, there are some problems as it is everywhere in the VC sector. We had to write down only 1 company, which was the smallest ticket size. However, it was from the impact side, it was a beautiful thing. But we wrote it down. We facilitated more than €5 million follow-on investment, which is coming from well-known VCs from the European region. So, for example, ABN AMRO's VC fund was invested in our Dutch company. The largest Italian impact VC was invested in our Italian company, and the largest Dutch impact VC will invest in our Italian company. So it just shows that the companies and the product market fit are validated by other VCs, reputable, well-known VCs. So that's probably shows something. And go back to the numbers. I think the portfolio is already not decreasing, but it's increasing the whole valuation, which shows, because we are in our 4th year, so it's really an early stage. So the J curve must go down in a normal situation. Right now it goes up. So I'm really satisfied with this.
Thank you, Eszter. I'm really sorry to stop you here, but we ran out of time.
I'm sorry as well.
Once again, big round of applause. Thank you. Thank you. All right. I'm sure you can network afterwards in the one-on-one matchmaking zone. We have all the time today to use to network. And now I'd like to invite on stage Andy Davidson from Nova. Please, round of applause. Let's give some energy to our speaker. Thank you.
Hi, everyone. Oh, let's use this side. Hi everyone. I'm Andy and I'm the CEO and founder of the Nova Venture Studio. You can see this is me. Until very recently I actually had hair on the top of my head. This is our investment thesis. So I'll allow you to digest this for a minute. I suspect one of the first questions that will spring to mind is, what is a venture builder? What is a venture studio? What is a venture building program? The term might be familiar to some people, but I think the honest answer is that no one really knows yet. I think this is a really rapidly evolving space. And I haven't got a lot of time to explain all about it today. We've only got a short pitch session. So what I intend to do is to show you some data around how Nova's venture building approach has worked over the last 10 years, and then tell you a bit of a story about Nova's journey and kind of explain how venture building works through the lens of our journey to date. So this is our track record slide, as you can see from the title. We've been doing this, our team have been doing this for 12 years now, probably slightly longer than 12 years. We've backed over 80 companies pre-seed and seed. In fact, in reality, that means that we've backed over 80 founders at inception. Our metrics are great. Our year-on-year growth rate for the period is nearly 27%. The figure in the bottom right is the average from the UK venture capital industry. So we're massively outperforming the market that we typically operate within. We've segregated our historical investments into two portfolios. We have Nova Portfolio 1. I'll come into some detail about what's in these portfolios in a minute, but at the moment our TVPI is tracking at above 5. We expect that to fully convert to DPI in the next 12 to 18 months. Nova Portfolio 2, it's a little bit younger. Our current TVPI is at 3.99, and again, we expect that when it converts out over the next 36 to 48 months to deliver a DPI of above 5. So we think our numbers are pretty compelling, and they prove out that what we've done historically works. So I'll leave this slide on. This is the normal, mundane, rather boring detail that you need to show to LPs in order to give them some information about your fund. And I'll get on to tell you a little bit more about Nova, which is probably a bit more interesting. So about 25 years ago, I was a software engineer, and I quickly became a software entrepreneur. And like most software entrepreneurs, I built a product, or not just me, our team built a product. We built an EdTech product, and we sold it to universities in the UK market. And then we raised some capital, which was an interesting experience. We went to the States, we made a big sale in California, we ran out of money and we went bust. So that was an interesting journey. We learned a hell of a lot along the way. And one of the things we realized, or the team realized, and it's possibly when I started thinking a bit more like an investment manager than like a software entrepreneur, was that in our business we were on one product and we had too much concentration risk. And we worked out that actually our team could probably have built, if we had appropriate domain expertise, we probably could have built 10 different products for 10 different businesses in 10 different sectors. So that's what we did. We went out and raised a small angel round, raised £500,000 sterling, so a very small round. We found 10 founders that we liked, and we backed them to create 10 businesses, and we built 10 products. Now, at the time, we kind of like never heard of the lean movement, etc. And we were really engineering heavy, and we probably built a lot of the wrong thing. But one of the businesses that we did build was a fintech that operated in the music space called Centric Music, and that sold for £53 million, February 2022. So it was a long time coming, but that was like a 100+ X return for us. And although it was a long time coming, early on the data looked really good. So that allowed us to grow our angel network, back more portfolio companies, and we kind of quickly had some other big wins. So we backed a business called Lucid Games in 2012. We've not exited that position yet, but that again is worth about £80 million at the moment, and we got into that at inception. So when that exits, it'll be north of 100 million, north of 100x return. And it's those two businesses that are driving the TVPI on our first portfolio. So the power law is definitely in effect. If you get in early, build a big portfolio, and you'll get a lot of your returns from a small number of winners. So by 2015, we'd kind of industrialized this, and our early wins had allowed us to build our angel network, to attract some super angels, introduce some early stage funds to invest in our portfolio. We built our team, to about 150 individuals. So this is not a fund management business with 5 or 6 people in the team. This is a business that has software engineers, product managers, digital marketeers, all the people that you would find in a startup. This allowed us to back more companies. We discovered the lean movement, so we started building the right thing rather than the wrong thing. We had some more wins. We backed a fintech called Door Ventures in 2015. We exited that, and I think that was a 15x for us. That's currently worth about £30 million. We backed a health tech business called Orca in 2016, again worth about £30 million. So we're buying into these businesses at like £500,000 pre-money, and sort of we're able to build organisations that can sell for kind of 30 to £50 million. So that takes us to 2019. We launched an EIS and SEIS compliant investment fund that co-invests in our portfolio. For those who don't know, that's kind of like a tax advantage fund that's only specific to the UK, and that kind of brings us through to last year. We closed out Nova Portfolio 2. We've got 35 portfolio companies in it, which we think is about the right spread of risk. And as I say, it's currently tracking at 4, TVPI of 4. We expect it, when we fully divest our positions, for it to be a DPI of 5. Surprise, surprise, I'm here today wanting to find LPs to invest because we're looking to fund our third portfolio. We've finessed our model a little. So in the past, we used to use angel money to pre-seed invest. We don't want to do that this time for many reasons I won't explain on stage now, but we want to bring money onto our own balance sheet to fund that stage. So we're looking to raise 12 to 15 million pounds. So it's a small fund in the scheme of things, but it allows us to do pre-seed, seed, some post-seed, and follow our money and our winners to Series A. And yeah, I think that's it. I'm Andy. I'm from Nova. We're a venture builder. We're looking for investment. I believe there are people in the room that want to make investments. If you want to find out more, come and talk to me.
Great. Thank you, Andy. Let's move on to the questions. Who'd like to start?
Thank you. So actually I have 2 questions. One, what's your secret sauce? Because I'm very familiar with venture studios. We're invested in a few, and you did show a very impressive performance. And also, I was wondering if you have any specialty in specific sectors in the venture builder.
So I'll deal with the last question last. So we're sector agnostic. We kind of, when people ask us why, we say we're experts in early, and that kind of has challenges of its own. And we normally lean on our founder for domain expertise and then the network that they build. Having said that, we've got, I think it's 10 companies in the portfolio of 35 that are health tech, and that's because we co-invested a lot with an early stage health tech fund. And it's interesting, it resonates with the first presentation. It's all software meets hardware meets science. So I'm wondering whether Liverpool might be included in the Nordic region, because then possibly he could co-invest in some of our portfolio. And then in terms of secret sauce, well, I've got to say our team, which is the truth. But I think it's the methodology we've built, and it's kind of an obsession with the problem that's being solved rather than any particular solution. Data and the truth, I think like trying to cut through layers of bullshit in the early stages really, and stop people kind of success theatre and people selling untruths, if that makes sense. And I think that's what's worked for us.
Thank you.
Thank you, Andy. Just a quick question on a legal form. Is it a standard GP-LP structure or something different?
We're actually open-minded. So at the moment, we've got a third of our funding committed from previous investors in our first 2 funds. And at the moment, so we've got a commitment, and we expect to close the whole thing out during 2023. But at the moment, we're kind of at the exploratory stage. This is the first time I've pitched this in public, hence my nervousness. But I think we can either go down a UK route, and it could be a tax advantage product, so the whole thing could be EIS qualifying, or we could set that aside and just form it as a standard GP LP structure. So we're open-minded really. It all depends on the types of people that we end up talking to who want to invest.
Yeah, reducing investment to 2 crude metrics, returns and risk, in a very simplistic way. You mentioned that you guys have doubled the BVCA annualized annual average return, right? Which is staggering. Bravo.
Yeah, thank you.
Impressive figure. Now, looking at risk, which is more difficult to quantify, because you're sector agnostic, would you say that roughly, approximately, your risk exposure is like the BVCA average, higher or lower? Is it easy to say?
To be honest with you, I've not really paid a lot of attention to them. You know, we needed a statistic to benchmark our performance against, and that kind of looked like a big one. You know, I mean, we tend to keep our head down and look at our own data, really. So I don't know how that relates to the risk profile. I mean, I do know that what we do is very risky. I mean, you've heard the term venture capital before. You know, we're in really, really early, but we think we've built a methodology that removes a lot of the risks that cause very early startups to fail, and we think that that's probably part of the secret sauce as well. Actually, that allows us, you know, we mitigate a lot of failure, which allows us to get these outsized returns that we're seeing. And the other thing is that if you look in the UK, 80% of tech companies sell for less than £50 million. So we're not out hunting unicorns. We'll leave that to people who are cleverer than us. We think, well, if we back some companies at £500,000 valuation, we dilute down half during the journey on the cap table, and we come out at 50 million. Well, we've had a 50x. Now I can get 2 of them out of my portfolio of 35. Then you hit the sort of numbers that we're showing you, and I don't think 2 out of 35 is overly ambitious either. You know.
Thank you, Sam.
I missed a little bit out on my speech before. I think, you know, our TVPI for Fund 3 says 3. Now that's because I'm British. If I was American, it would say 8, because that's what the underlying data is telling us.
Yeah, thank you, Andy. I'm really sorry, but we got to wrap up the session. So thank you very much. Big round of applause for Andy. Yeah, right here. Right now, I'd like to welcome on stage Petr Sima from Depot Ventures. Are you around? You are. Perfect. All right.
Hi, my name is Peter, and I represent Depot Ventures, and we are founders first investors. We are pre-seed stage, super early stage, and we are powered by Angel Community. I tell you my story. I launched and founded my consulting firm in the early 90s, and in 20 years I was bored. I liked what I was doing, but it was quite kind of boring. And someday, 2016, one young analyst from our team came to me and changed my life. He asked me if he can work with startups. So I said, why not? And I fell in love with startups and everything which is related. So I left my firm. The young analyst became my business partner. Then later on, Jan joined us when we launched our first fund. But that's not it. Our team is quite big given the size of money we invest. That was about us and what we are doing. We launched our first angel fund in 2019 alongside with Angel Network. Our first angel fund was rather incubator for angels, and we are still running these incubators for angels. But we found out that that's amazing thing, because we realized that we can do 15 investments per year. We can invest very small tickets because we are really first investors, and we closed the first fund in a year and realized, okay, this is a great idea. We will be doing these rolling funds every year for angels, just to allow angels to invest. So till now we have 33 companies in portfolio. We launched more than 10 syndicates. We have 1 blockchain accelerator, more than 200 angels in the community, and we screen 2,000 deals per year. Our investment focus is Central and Eastern Europe. That's partly because we live there and partly because we see huge opportunity there. In there, most of investors, including VC and angels, are still very conservative. So if you are a founder and you need first money, first investor, it's kind of tricky because everybody asks you to show some traction, some revenues, and we are the ones that invest pre-revenue. And overall, if you look on the situation in US and in Europe, it's quite different. You know, the US traditionally was 1, 2, 3 hubs, and now it's changing. But in Europe, we've got UK, we've got France, but there are small cities, small hubs all around Europe. And our mission is to connect CEE. So what we are that's what we are doing, because we're in CEE. They are really, the countries are very small, but there is huge technical talent, huge technical skills. But founders need some help. So the way we do it, angel funds, we are really we are getting the best founders from all around Europe, Central, Eastern Europe. We have a great community of our investors, co-investors. We launch syndicates when it's possible. Now we are launching seed fund to allow us to invest bigger tickets, and we are, together with our founder, with our investors, we are very helpful, as much as helpful to founders where we invest. As I said, we screen more than 2,000 deals per year, and we already got quite good reputation all around CEE in Baltics, from Baltics down to Bulgaria. So the deal flow is quite strong, and the process is complex. We can create value for both founders and both for investors. Tatum is one of our most advanced company, and we invested 100K in 2019 with less than 2 million valuation. Then we put together a syndicate to finance the bridge round that then went with 30 million valuation, and then we allowed our investors to participate in Series A round with 200 million, nearly 200 million valuation. So altogether, with 100K in the beginning, it was nearly 1.5 million at the very end. So Angel Fund 3, it's combination of Angel Fund plus Seed Fund. Our why we are doing is we need bigger tickets. With 100K tickets originally, it's not enough. Our rounds are bigger. We play quite active role, so we need to be able to really be one of the most important investors in the first round. We want to invest roughly in 50 companies in 3 years, and we want to have 40% for follow-on rounds, which in Angel Fund so far there was 0 for follow-on rounds. Our strategy is quite clear. We will continue doing what we are doing. CE diaspora. We focus on CE founders, and the company can be anywhere. Quite often it's Delaware from the very beginning, or UK, and we are generalists. But that said, we have many companies in deep tech and fintech and marketplaces. That's what we like. Our average ticket 3 to 500K in the per seat. Yep, that's it. So join us if you want to be exposed to 50 companies from CEE.
All right, thanks a lot. Let's move on to the questions.
Thank you very much. First question from me. Well, given the bigger size of the new fund and the larger number of investments that you target, how are you going to manage that additional workload, given that you have already some existing portfolio?
Well, the workload is the same. We target 15, 16 companies per year, and we've done it for 2-3 years now. So the workload is the same. The kit size will be bigger. That's what we want, where we aim to, because these round size that we are getting now are larger. Many founders bootstrapped longer, and as I said, our round size is when we started investing, we're like 500,000. Now it goes 1-2 million, and we want to play a more important role.
Hi, thank you. You've mentioned the average ticket size will be around 300K, and then I saw there was something about the angel program, which is 100K. So is it a program, or is it a kind of a mechanism that you have that the angels join in? Can you elaborate?
Yeah, we are kind of different, and our structure is a little bit different. Is a little bit complicated. So we are raising seed fund, but alongside the seed fund, we will be continue raising these angel program, and we call it angel program, but it's rolling fund every year. Every year, angel investors invest in 1 year in 15 companies. It's very easy. It's very easy, straightforward for them. We are now going around all the CEE. We want to have angel investors in each CEE country, at least one from Estonia down to Bulgaria. And we create community, community of the best and best angels in the area. That's why we want to continue really every year better angels, and we see it now. Now we are raising Angel Fund 3, and the investors that we have are much better quality than we had in the beginning.
Any other questions?
Yeah, just you mentioned you are kind of sector agnostic and more on a generalist side. I mean, going forward, as you invest larger tickets, are you still looking at any? Do you see yourself sort of evolving in any sector specific way?
Yeah, we naturally evolved in fintech, blockchain. We've got few blockchain infrastructure investments. So deep tech, that's what we like. Software deep tech. We would love to go in hardware, but we don't have LPs for that. So that's naturally evolving. Fintech marketplaces, deep tech.
Okay, thank you so much. Big round of applause for Petr. And now I'd like to invite on stage Lucanus Polagnoli from Calmstorm VC. The stage is yours. Please, some round of applause for our speaker. Thank you. Let's begin.
Good morning. If you feel awkward because you hear Arnold Schwarzenegger on stage, it's an Austrian here talking to you from beautiful Vienna without the muscles. The best non-cyclical investment, what would that be? I think it's health. If you look at the graph, this is from 1990 to today. Every recession, every turn up and down in normal markets, if you look at health market, this is just one way, and it's one way up. We are Calmstorm, and we are the #1 health tech fund in Europe. We are the most active pre-seed or early stage investor in Europe. And why are we called Calmstorm, and what are we actually doing? We are a boutique, super early stage fund, meaning very small, investing very early, but we invest in quite a lot of companies. And I tell you how we do that, because that's a Gordon knot that we need to cut through. We think that entrepreneurship is a continuous storm, and if you think about, maybe for some of you have ever thought about sailing across the ocean. If you would do that on your own on a little sailing boat, who would you ask first? Your banker financing the boat, or another sailor coming back? We think that founders talking to founders, that founders want to get advice from founders, and that's why we are building a founders fund. And that's why we also called Calmstorm, because we want to help them calming their super early stage storms. This is what we built. In February 2020, we started with Calmstorm 1. We originally raised 20 million. We did an average of 150,000 as an initial ticket. We only invested 40% of our fund, and 60 is held back for follow-on investments. And we invested in 56 companies. Only digital health and well-being, so we are a sector-focused fund. We do that all across Europe, and sometimes in the US if it's European founders. Now that's the Gordon knot. So it's impossible for me to talk to 56 companies and help them and support them throughout their stages. So what we did is we onboarded more than 50 entrepreneurs all across Europe who are only incentivized by carry and not as a venture partner deal by deal incentivization. Why is that important? Because I think only if they help us baking a bigger cake, they can also get a piece of the cake. These people help us, helping the founders to overcome the first storms, which sometimes are the products, sometimes it's distribution, but often it's just company building. Alfred, my partner, is one of the founders himself. He co-founded Runtastic, sold it to Adidas a few years ago. And Hansi, I've worked for Hansi quite a long time ago already, before I joined Speedinvest. Maybe you know him. He's one of the most active business angels based in Austria. This is our portfolio. You might know one of those companies. If you don't, you're probably not as deep into digital health as we are, which is okay because we are a sector-specific fund, so it's us who should know them. They're all across Europe, from Portugal to Bulgaria, from Sweden to Italy. And we invest in both in solutions for users and patients, as well as in solutions for healthcare professionals. Why do I call them users? Because if you're pregnant, you're probably not ill. You just need a certain solution for your state. Some of our investments made quite big upticks in the first few months. These are only 10 examples out of 56 portfolio companies. But what is important, I think, is that big investors are picking up our deals. Founders Fund, Seven Wires, Molten, Octopus, you know them. And I think that's what we actually try to do. We are kind of the bridge into the bigger venture capital scene. Some of our numbers, we are very diverse because, not because Lucanos is such a diverse guy, but I think because healthcare is very interesting for purpose-driven founders, also female and diverse founders. So our teams that we invest in much more kind of future-oriented than the typical SaaS guys that I've seen while at Speed Invest in my previous career. Now we are raising Fund 2. Same thing. And you're going to ask why don't you raise 100 million? I think because if we are at pre-seed stage and seed stage, we need to stay close to our model, which is small tickets, very early, helping them to get funding from bigger funds. So we will stick to what we've done so far, maybe increase the fund size a little bit just to have more follow-on power. I probably skip that slide because if you think about health, there's no industry that is bigger probably other than maybe climate tech in future. So any number you find is going to be sure that it's big enough for venture capital. What is interesting though is that valuations went up and now down, and the question is it reasonable to invest small tickets? Is it possible to deliver returns to LPs? And what my previous colleague Oliver Holle said here on the slide, I think you're gonna see the difference where you invest. The valuations of pre-seed haven't changed a lot, while the valuations of Series Bs and beyond have. But even if they go up and down, they're still 30x higher than where we're investing. We found a niche, and that's our co-investment niche. So we don't compete for lead investments. We co-invest with the lead guys. We co-invested with Octopus, Speed Invest, Pro Founders, Connect Ventures, you name them. They invite us for sector-specific expertise, and it fits well into our model. Some of our co-investors, some of our follow-on investors, we of course also invest a lot with angel investors. And then there's not only me, there's also a team, 2 former entrepreneurs, 1 former manager at Speed Invest, Veronica, who I know since day 1. Still, you could consider it's a very small team for such a big portfolio, but remember we have all these founders helping us, incentivized by Carrie. What is very important for me, and I can't show you the video, although I would love to, what is very important for me is how we work with founders. Because we are a founders fund, we try to do that very differently. I guess if you're interested, I'm happy to give you more details about that. But our quarterly academies and our portfolio days, the way we try to help many founders by putting them together with experienced ones and sharing their experience, I think is it's to some extent our secret sauce. If you would invest in Fund 2, these are the first investments that you would invest into. You can see UK, Germany, Sweden, Spain. You might have heard about these companies, you might haven't, but these are really very interesting verticals, from femtech to dialysis to mental health or life insurance. Some terms, 10% is committed by us, the GPs and the SPs. And what I think is important is also that we have co-investment opportunities for our LPs. We did 92 co-investment transactions with the existing LPs in Fund 1. Thank you very much.
Thank you, Lucanus. We only have time for one question. Is there? Yeah. Okay. Feel free. Microphone, please. Yeah.
I think you mentioned that you have a 45% diverse funds team. What do you mean by that? Is it along ethnocultural, gender lines, or that you have as many PhDs and physicians as working class nurses? What do you mean by that?
Can you hear me? Yes. It's a very good question. The 45 is actually only female and male. If we would go into more diversity, backgrounds and so on, it would be much higher, the percentage, but we haven't done it yet. In terms of just male founders versus non-only male founders, it's 45%.
Okay.
All right. Maybe just a quick question, if you have it. If not, it's also fine. Just okay.
Sorry,
go ahead.
Just in 3 biggest risks for you, how you see them on the way to deploying your new fund, and the 3 biggest risks for you in
risks.
Risks, yes. Thank you.
For Fund 2?
For this new fund, yes.
I think one of the biggest risks always is that we can't dig through the noise. There's so many people building something in health from a purpose-driven point of view, but is that really, can that become a big company? So the screening and picking is, I think, in an industry that's so hyped, very, very important and very hard to do. We help ourselves by asking all these founders, do you know these persons? And we do a very personal decision. Is that person really does she or he want to build a big company, or do they only want to solve the problem? The second risk is the risk that everyone has of raising a second fund, is that after 3 years of deployment, we cannot show DPIs as the big guys, and therefore we need to find enough investors who believe in us, in the team and the story and the industry, because we are industry-focused fund. Someone needs to believe in health and not only in venture capital as it is. And the third risk would be if outside the bus hits me, because obviously the fund is very much about Lucanus. There is a bigger team around, but that's whatever. You always have that as a single GP as a risk.
Thank you, Lucanus. And thank you very much to our panel of LPs, Sergey, Nick, and Shani. Make sure to talk to them further. I wish I could give you more time to maybe talk about some remarks, but we have to move on with the schedule that we have prepared. So I'd like to invite Sam on stage to let us know what is next. Thank you very much, guys.
All right. Rosie and everyone, thank you so much for a wonderful discussion. So, next one. What LPs are looking for?